So, Joe, the U.S. economy hasn't experienced a recession in about 7 years. How likely do you think a U.S. recession is in the next year or so?
Sure. Well, thanks, Noni. I mean, clearly, at the beginning of the year, the markets were reflecting fairly high, elevated odds of recession, which in our estimation and judgment were somewhat overstated. And the reason for that is, expansions all equal just don't die of old age. They generally die of a combination of two things: imbalances in the system, such as housing run-up and overbuilding, as well as a shock, a so-called something that comes in unforeseen negative that can deteriorate confidence. Right now, there would be two or three indicators that would suggest, at least non-trivial odds of recession. I think that would be just the low growth environment we have been in and we've talked about for a number of years. We're closer to a low growth, a zero bound, so to speak, in economic growth. So that in itself would raise odds. Parts of the U.S. economy are struggling. Manufacturing and exports, again, something we talked about at the beginning of the year in the outlook, remain in place. And then finally, you just have corporate profits. They are elevated, but they've started to come down, even outside of energy. And so that at least is somewhat of a yellow flag in terms of a warning signal. That said, it's hard-pressed to say right now that odds of recession are very elevated. By our judgment, certainly roughly 15-20% odds. The reason why they're so low is because we still have a Federal Reserve, despite modest tightening, still very accommodative, meaning 50 basis point Fed funds rate, well below the rate of core inflation, so very accommodative. We have, it's hard-pressed to see, a large run-up in leverage in the system, whether it's financial leverage or, more importantly, consumer debt and so forth. Consumers, in some part, are still paying down debt in the mortgage sector. And then finally, you just look at other imbalances. The housing market, although it's grown, it's still coming from very depressed levels. And so, as a share of the economy, wouldn't point to an outside risk of the U.S. economy tipping over. If we would tip over, I think we would be looking at shocks, very likely overseas. Brexit is something that we will see headlines on. Britain perhaps leaving the EU in the middle of the year. I think more importantly is China. We don't see that emerging as a significant threat this year as tipping the global economy into recession. But if we are monitoring an area of the world that could be recessionary the next 2 or 3 years, it would be potentially from China.
And Joe, to what extent have the markets been reflecting recession worries?
Well, I think in the beginning of the year they were actually reflecting the equity market had sold off, fell over 10%. The corporate bond market spreads rose relative to, say for Treasury securities. And so in that respect, the financial markets were pricing in at least a 30 or 40% odds of recession, much higher than we would have ascribed when we looked at those indicators in addition to economic ones. But since that time, since we've had stabilization, particularly in March and into early April, those odds are now more consistent with what we would have put overall, which is still much lower, I'd say roughly 15% or so at best. So again, markets were somewhat more pessimistic, but I think that's not surprising just given the inherent volatility in the markets.